Well, hey there. Welcome to another series or another episode in the Legacy series. Today, we're going to be talking about leaving assets tax-free to your heirs. That's the holy grail, right? Everybody loves tax-free. And, so a lot of questions end up coming across my desk from clients and prospective clients, people we meet with on an everyday basis, in order to talk about retirement. And, a lot of times we'll get the question, do I leave the IRA or the Roth or a taxable account to the next generation? Do I leave stocks, bonds, mutual funds? Do I leave my annuities? Do I leave life insurance, property, my business? What should I leave to the kids? What's the best thing to leave to the kids? Should I pull from my IRA money first? Should I pull from my Roth money first? What's the order of withdrawals? I mean, they don't call it order of withdrawals. They basically just say, what should I pull from first? And so some of the answers to that could be this. So first off, some people will say, well, you know what? I think I should pull from the Roth first because, it's tax-free, so I won't be increasing my income, where it might actually be the opposite. You may actually want to pull from your IRA first so that you can let that Roth money just continue to grow, because guess what? You don't ever have to share any of that with the IRS. And you may want a large chunk of tax-free money that you can pull from down the road. And especially if you're of the opinion, like a lot of us are, that taxes are going to have to go up. We are in historically low tax brackets right now. And so if you feel that tax brackets or the tax rates could go up, well, then it might make more sense to spend some of that taxable money now rather than the tax-free money. And also there could be ways of pulling out some of those taxable accounts tax-free as well, because if you're not in the 22% tax bracket or above, and you've got long-term capital gains, and those in accounts that are outside of IRAs, they're outside of Roths, they're what we call like a brokerage account, a taxable after-tax type of an account where you're not taxed on the basis, but you're only taxed on the growth. But if it's long-term capital gains, you only pay tax on that if you're in the 22% tax bracket or above. You don't pay any long-term capital gains taxes if you're in the 10 or 12% tax bracket, or if you're in the 0% tax bracket for that case. And so the assets that could be very, very good to leave to your heirs, obviously the Roth, that's because it's tax-free to you, it's tax-free to your kids. Obviously, that's going to be one of the no-brainers, right? But now, thanks to the Secure Act, there are some issues with the Roth IRA when you pass that on to your heirs. They have to have all of it out within 10 years. So once they receive that Roth IRA when you pass away, they have to make sure all of that account is completely out within 10 years. So they're going to have to invest that money somewhere else. And where do they put it? Well, if they want to keep the tax-free status, they could contribute to their own Roth IRA if they have income that year. They could also contribute to cash value life insurance to have a tax-free ability to pull out, tax-free loans, withdrawals, and whatever, to use that to pay for some of their expenses in retirement as well. Now, so that could be it, or life insurance, period. You could leave life insurance to your kids. And the great thing about that is, just like the Roth, it is tax-free, but there's no distribution rules. You don't have to take it out within 10 years. You can just take it out. You just receive the lump sum of the life insurance policy. That's it. So that's it. Set, done, boom, cut and dry. There's no extra things you got to worry about there. And then, so you got life insurance, you got Roth. Next, it's possible that you could actually get non-qualified assets, those after-tax assets, completely tax-free. How can I say that? Well, because you get what's called a step up in basis. So if your parents say they bought stocks, bonds, mutual funds in one of those after-tax accounts, right, that has the long-term capital gains, let's say they bought that for $100,000 and throughout their life it had grown to $500,000. When you receive that, you receive it at $500,000. The basis gets stepped up from 100,000 to 500,000. So if you literally sold it on the same day that they passed away, you would not pay any tax. So guess what? Basically, you received those proceeds tax-free. I'm putting air quotes for compliance purposes there on the YouTube video. So yes, you can receive those, quote, tax-free. Same thing goes for any other type of property that has capital gains treatment. What could those be? Land. If you inherit land from your parents, you could actually sell that land and not have to pay tax on it, because once again, the basis, if they bought the land for 100,000, now it's worth 500,000 or 1,000,000 or whatever it is, that's where your basis steps up to. So you could receive land, and if you don't want it, you could sell it, and you will not have to pay any tax on that because of the stepped up basis. That also applies to real estate, not only your parents' primary home, but if they also have any rental property, you could actually receive the rental property without having to pay any taxes on it. You inherit the rental property. You're like, I don't want to be a landlord. I don't want to have to worry about the property management company. Let's just sell all that. Boom. You get that without having to pay any taxes on it, as long as the sale price and the fair market value and everything like that are the same as what the cost basis that got stepped up to are. So there's a lot of assets that can actually get passed under current legislation, tax-free to your next generation. And so, and even if some of the Biden administration does get their way and they take away the step up in basis, they're only taking away the step up in basis for big amounts, really large amounts. So most people don't have to worry about that, even if they do, which it's still not, clear whether or not it is at this point, but most likely that is going to be one of the things that they're going to have a really hard time getting through. Very, very hard time getting through. So that's it. You could actually leave a lot of things tax-free to your heirs: Roth IRAs, life insurance, non-qualified accounts because of step up in basis, land because of step up in basis, rental property, main homes, vacation homes, right? So anything that has capital gains treatment can get that stepped up in basis. So there's a lot of things that could actually go tax-free to your heirs. One of the worst assets to leave to your kids, ironically, is probably most people's biggest asset: their 401k, their IRA, all those tax deferred dollars that they saved in a retirement plan for their entire life. And maybe they haven't done any conversions or anything like that before they pass away. So from a tax standpoint, your IRA or your 401k is actually one of the worst assets to leave to your kids. So go for the Roths, the life insurance, the non-qualified accounts, land, real estate, all those things, so that can pass tax-free. Hope you liked this installment. Everybody loves tax-free. I do know that. So hopefully this gives you some ideas. And if you're curious on really how to make sure to get this set up, right? It's like you don't know whether or not your assets are set up. You don't know how to get them set up like this, or have these types of accounts in retirement to make sure that they can go tax-free. Reach out to us. We've got our calendar link is probably somewhere in the description here, depending on where you're looking at this, show notes, you name it, right? So that's it, guys. We're just trying to bring more and more content to you to empower you to live the retirement you deserve. So go ahead and, I guess, roundhouse kick the subscribe button, judo chop the subscription. No, what is it? The notification bell. There we go. Yeah. And that way you can always be updated whenever we bring out new content. So thanks for listening, guys. Tuning in again next week. Bye.